Okay, from the streets of Philadelphia, we have Mr. Z and Go Eagles. John, how are you this morning?
Good morning, Larry. Thanks for taking the call. Yes, Philadelphians are quite enthusiastic this morning.
That's probably the understatement of the year, isn't it?
Well, speaking of understatements, it is a challenge here Sunday and Monday. Not only do the Eagles, the Philadelphia Eagles, win their first Super Bowl in 52 years of the events, the same time frame gives us the greatest velocity of price change in stock index futures in 2 years' time. So the challenge to navigate both of those simultaneously, it's a challenge, I confess.
It's not easy, as they say in the trade. What can I do for you, my friend?
Larry, I'm asking a question as a student of yours since 2007. On the EMINI S&Ps, the S&P index, the trade shorting the S&P up near 2870 was an obvious low-risk pattern recognition trade, given that monthly chart ABCD pattern stopping precisely at the 2870 mark, which is the ABCD to the point. I mean, it's precision. I must confess, I find it remarkable. I don't understand why that happens, but it is what it is.
Neither do I.
So that was a low risk trade. My question is, Larry, I'm assuming you had shorted the E-minis somewhere in that area, just on a pattern recognition trade entry. My question is, it would be very helpful for me, given this dramatic move, if you could share where you sought to cover or where you will cover and why. I always get challenged when things start moving, a lot in a short period of time in keeping my head. So if you could answer that question, I'd be much obliged.
John, regarding the E-mini S&P, I could see there was a big ABCD there, but the pattern that was the clearest to me was in the Russell 2000 IWM. That was the one that, in fact, as I posted it this morning, I will post it again because it looks that interesting. And that is, it was the only one that really gave us an indication that it was at some type of a major high, because we had the real clear ABCD, the butterfly patterns. But let's just move on. We've had a big move. Now you'll notice here on this Russell, we've got a 61% retracement from the November low coming in around the 150 and change level. We're close to that right now. And the other thing that we wanted to talk about, of course, we'll get to that E-mini. We'll bring this up to take a look at. I just wanted to show you that last night we broke below the 61% retracement of the January low. We got all the way down to 2730. Now what I'm expecting now, and this is, believe me, I don't know whether I'm going to be right or not, but because that VIX index got up to the exact price last night at 1937 where the big ABCD was, I'm assuming that we're probably going to get some type of a bounce here. I don't think look, these bounces could be 600-700 points now, because we're in volatility areas that we haven't seen for quite some time, and so we have to be able to factor that in. Back to your question, John, the only way that I can meander through these markets is to move down to a 15 or 30-minute chart to try to see the patterns a little clearer. I believe that there's a possibility that the high for the year is in, but we don't know that. We won't know that for probably a month or more. But the only thing that I can do is go down to a 15 or 30-minute chart to quantify the risk to see whether I can enter a trade, because these swings that we're going to see from here on in are going to be dramatic. If you remember about 2 or 3 weeks ago, we had a 350-point move in the Dow, and that was on the downside and went right back and made new highs. But that was saying that the next move was going to be 1.618 of that. Well, it ended up being, about 1.9. So the swings we're going to see. We'll see 1,000 points in the Dow in one day, either up or down, maybe both. Sometime this year, without any trouble at all, we'll see 1,000 points. That's going to be a no-brainer. And the only reason I'm saying that is the biggest move so far has been 650, around 700 points. You multiply 700 points times 1.618, that gets you to 1,100 points. So we're going to see one of those without any trouble at all. And it could do both sides, up and down.
Okay, let me put you on the spot. Having shorted the E-minis, where's the cover?
Well, John, you want to cover on the low on February the 15th at 9:20 in the morning, and I'm not sure what the price will be, but that's. I don't. I just watch the patterns and the ratios. That's really all I'm looking at. But no one else knows either. But we'll wait and see if it unfolds like we think it's going to. But we had this big move down. We had the gap. Remember, we still have 9 gaps to fill in the Dow Jones Industrial Average, and some of them are down around the 22,000 level. So, we could see a huge correction in this thing, and it could still be bullish. You just don't really know.
Yeah, that's exactly right. Thanks so much for that discussion, Larry. Just in passing, to wrap up my conversation with you, I just wanted to share with you just an observation on the silver market. Silver, of course, has been lagging the gold rally. That's certain. What I observe, however, is that the rally from December to January, 1565 up to 77, has been corrected quite significantly. That flush that occurred on Friday down and into Sunday night at 1651.52, that's pulled back a good amount, more than 50% of the preceding rally. For me, assuming this is a bull market, and that's an assumption, and that's not proof yet, I understand that, but that flush is, for me, sets up a terrific long side reentry. So just wanted to share that observation with you.
I can certainly agree with that, and the fact that gold is held above the 1330 level after 3 attempts has been pretty good. The fact that it's not really exploding to the upside is a little question mark, but you're right. If we can get silver back above the 1740 level one more time, this thing could have pretty substantial legs. I don't think there's any question about that.
Thanks for the IWM and E-mini discussion, Larry. I do appreciate that, sir.
You bet, John, and thanks for calling in. We always enjoy talking to you. You do some great work there in the Tiger Den, and everybody appreciates it. So just stay away from the Broad Street today because it's going to be pretty wild out there, I think.
Well, we'll call in from the parade in a couple of days.
All right, thanks a lot, John. Mr. Z from Philly. We'll be right back, 877-927-6648.